Jumping into it. What are we at? 10:28. So just starting to get into that sort of Asia session, pre-Asia session volume at the moment. So let's have a little look at sort of how the chart sort of played out over the end of the US session last night. And we saw that sort of this break and subsequent sort of little back test on Aussie, just where we're sort of starting off. Obviously sort of kicked on for another little leg. It did come back. If you got to note this sort of thing of how we've sort of marked out this 90s line here, and we've seen the reactions previously on these ones. I mean, this one here, bang, 1.5%, 1.9%, didn't even make it that time. On this third one here, obviously this sort of came back, about 0.6%, but of course, the next 4-hour candle charged through, and we saw what that reaction was after that play as well. So I think sort of what a small little sort of takeaway from this at the moment is that we're through this sort of falling resistance. We've locked in what for now seems to be a lower high. I guess this would have been your lower high, sorry, a higher low. This would have been your previous one, but of course, coming from the base down here, sort of drawing it up, starting to sort of picture out what could potentially, if this does continue up to the top side, could be sort of forming some sort of a channel. Now, of course, sort of like, these things aren't going to just rocket up in one go. And of course, first things first, got to get above this 90s line. Because as we can see here, let me get these ones out of the way, it's been quite a strong point. That head and shoulders that we had a couple of weeks back, this was the neckline. Of course, when it was underneath this as well, we got knocked back down quite considerable, as I just marked out 2 seconds ago. So this 90s line is a short-term swing position for us to get above, certainly. And if we're going to see this sort of like potential head and shoulders play out, we obviously, first step, we've got to get above here. And then we've got a little bit of Aussie data coming out this morning. Actually, I think we've just had that drop now, so I'll just give that a quick check. So it's what have we got here? Westpac consumer sentiment. Previously 2.9%, now negative 2.6%. It's only marked as a sort of low impact, and as you can see with the price, this is on a 4-hour. It's not really having any sort of impact at all. Actually, even if we put this onto a half-hour, you can see its price is actually just appreciated a pip or two just off the back of that. So I would say more or less just unaffected by that. I wouldn't really be sort of chalking that up to anything. We do have the NAB business confidence, previous at 1, coming in 1 hour's time at 11:30. So that may sort of move things a little bit more. But as I said, look, we got US CPI coming out, and that's the big one. That's 12:30 tonight, local time. So that's really going to be the one that the market's waiting for. Like these little bits of, second and third tier, fourth tier kind of Aussie data doesn't really impact things too much at all. I mean, if the US is moving, that's what's going to move the Aussie. But point being is we got that break of this falling resistance that we sort of isolated on the weekend. Got the back test and little push up here. So in the immediate, back up above these 90s, obviously cracking that 64 round number, 64 handle will be quite a sort of like positive looking thing. It looked like it was pretty clean sort of traffic sort of coming down from this 64.30-ish kind of zone. And this was that little fake out move. Like we had a little wedge sort of forming, if you remember, sort of coming down through this area here last week, and popped out for a second. This was at the same time that DXY was doing its head and shoulders fake breakdown, and then obviously the fake breakdown shot up and boom. So I guess this is the kind of thing, so as I keep saying, it's not part of DXY, but your broad US dollar movement across the markets, you would have seen a lot of people go, okay, bang, try to sort of see this recovery here, jumped in long, and just as the same with DXY selling off to the downside, bang, snapped out a whole bunch of people and then just really ground along for the rest of the week. So yeah, I think in the immediate, just want to get up above that sort of 90 level, above the 64 handle, and then we can sort of really assess where things may sort of go from there. But as I said, sort of when you've got sort of larger bits of data coming out, as I said, like the CPI tonight, the US, markets tend to be quite subdued and quite cautious sort of through these periods. So any sort of gains, I think, will be slightly moderate. But yeah, of course, we'll just sort of have to wait and see. The CPI is expected to sort of come in on a lower expectation than last. So it was 3.7 last. Expectation for year-on-year CPI for the US is 3.3. And a month on month, 0.4 down to 0.1. So if they come in with those expectations, we're going to see the US dollar, we should see the US dollar sell off. I'm sort of cautious against saying, this definitely will happen. Can definitely play those positions, but as we saw with the RBA the other week back over this period here, you sort of think, okay, if they sort of raise the rates, we should go up, and we did for like 10 seconds. And then it's just been absolutely hammered since. So anyway, getting above this sort of falling resistance is the first part. Second part is to sort of get a little bit of a triangle pop to go out to the top side here. Little things that this could sort of be sort of forming would be, some sort of little ascending triangle here. So to sort of get a break, if we do get this and it does then sort of subsequently pop out the top side, I'd be looking for sort of like a short-term measured move, probably around the size of the triangle here, which would be this section here. So make that a measured move. This would give us a pretty good sort of little short-term target to sort of say if we are going to get that pop out. And this would again sort of be coming up to this other side here. I wouldn't be surprised if you're getting up around this zone, they sort of take it up to this area here, the 64.30 area. Probably sort of just tip over the top there, just to sort of like getting, like, if it's moving up, you can always hit some little stops. And then, of course, that'll sort of be coming back down. And this plays into our whole sort of, inverted head and shoulders idea. So if we do get up here, we get the sell off, we come down here, we can form some sort of consolidation down this side over here, and then sort of get a break higher. I'll be happy to sort of draw that up as our neckline, which obviously gives us a measured move back up to test that sort of major breakout. And by that stage, if this, of course, this is all hypotheticals, but if we can get this and break out back up to these previous highs, this is pretty good for sort of firming up a bit of a channel that we're going up along here. So I think these would be some nice levels. I mean, obviously this was the price target originally, which, yes, I guess still maintains. What I mean, if we can sort of get to move towards it, but certainly at this stage, that's a while off. So here and now, above the 90s. Cool, DXY, let's flip over. We got the break of the channel. So this is what we were looking at last night. I think it was coming down for this second effort here. As I was doing the video last night, I was like, okay, look, we're going to come down. I drew up, I think, I'd see better on a 4 hour, or on the 1 hour at least. Yeah, exactly. You can see that I thought it would come down here, get a bit of a bounce, come back up, and obviously one more shoot up to the top side, bang, and then sort of subsequently sort of came down afterwards. So interesting to sort of see where this goes from here. Obviously, this kind of move up here negates a little bit of what would have been a bit of a channel, but we are seeing a little bit of a tighter edge here. So I'm still happy to sort of say that, this is broken through what would be the main channel. This could almost be a bit of a wedge sort of coming to the top side here. And this is going in with what I was saying, that we're starting to get this rollover effect and it's sort of coming back down here. Again, CPI coming up. I'm not expecting any massive moves prior. I think if it does sort of break to the downside here, we've got a very sort of tight little channels that are coming through here. I imagine these areas here to sort of come in as supports again. So, we've seen the buyers have been there quite strong. This was that fake out that I was talking from this head and shoulders that was playing out. That obviously slipped down, but then the buyers just snapped that straight back up. So this zone through here is what I'm looking for in terms of sort of a short-term, like I said, maybe through Asia session target. So I'll just watch for the way that it breaks. If we get a sort of bit of a pop, the way that it gaps on open, if it gets a pop to the top side, then, we may just see a little bit more stuffing around this area. But certainly I think as the market is expecting a considerable kind of drop off in CPI print for the US, I think, you're going to see some positioning based on that will actually come to fruition. Of course, those positions are unwind quite quickly if that doesn't actually happen and they get a hot print. But, I think the market is going to align itself with what the expectations are sort of prior to it coming in. So that would mean a little bit more cooling with the US dollar, as we sort of saw through yesterday's session. Flip across to gold. Gold actually got a little pop. I'll use this other chart because that one's a bit scrappy. So yeah, we've sort of come through these. I can get rid of this one. This is a failed breakout attempt, and that's which has given us a larger sort of channel coming through here. So this is what I was saying on the weekend video, that you know, you were going to see a couple attempts to drive down. So sellers came down, was bought back up, sellers came down, bought back up, sellers came down, bought back up. And if you zoom right in on this, this is very typical gold price action, where before it makes its move, it fakes out to the opposite side. So, you know, as we sort of have a look here, this is your breakout box, this little zone here. And this is what I say about gold. Gold loves doing this. It sort of goes, okay, yep, down, down, down. This is just a fake out. This is all it is. Like, it's just, you know, they've come down here, closed outside, trapped a bunch of the market, and then they've thrown it back up the other side. And quite a considerable move. I mean, we've gone for, you know, how it has been traveling. You know, that's, I suppose we had quite a large bullish move here, but obviously you can see the general theme is very much sell off, sell off, sell off. So now it's sort of coming up, testing the top side of this little downtrend channel. You'd want to see it sort of break up into this area to get this sort of ranging that we're looking for to sort of happen in the higher zones. But realistically, I think, you know, at best, I don't see it sort of going up past 60 or anything like this. So again, this kind of little action, I think we're still going to be looking for. I think there's still some basing that needs to be done. You may, again, sort of get something that does something like this as well, where it sort of like comes down and sort of stops out anybody that happened to sort of catch the long positions from down here, and then bang, snap them out, drag some more people in. This will give a retest to the top side of this falling resistance, test it for support, and then sort of fire back in, and then sort of go off like this. With gold, generally, if you get this move here, like that sort of fake down and then back up, depending on what sort of time frame you're trading it on, these are obviously very bullish kind of things. And we're seeing here, again, this is, I keep sort of coming back to these ones, this negative divergence. You know, prices moved down, the selling hasn't matched it, and we've seen a basic general reversal and move to the top side here. Still has a lot of work to do. And again, CPI sort of coming out tonight. I imagine it to be quite quiet. Asia session, I give it a $5 range for gold generally as best. So yeah, so still happy to play sort of long side with this, but I wouldn't be surprised if we get some fake outs and some sharp drops down here. I don't think this is going to be any sort of fast moves, certainly not through Asia session today. Flip across copper. Copper seems to have played off quite well. That negative divergence again, you're seeing these things across the board. Showed it on the 1 hour. This is the 1 hour chart from the weekend. And we saw that the buying sort of, even though it's sort of come down this level here, as marked by this line, you know, came in that little bit higher. And you can see it was higher than it, not as oversold as it had been previously, yet price was showing a deeper pullback. Subsequently, bang, push back up. So it's getting into a very sort of tricky point, as I said a couple of times. I think this is going to be a very crucial line for it to get above. And again, it's coming into it at a time when we've got US CPI coming out. So yeah, again, I just don't think we're going to get much through the sessions today, but depending on how the print comes out tonight, I think we could see a lot of things pop. Again, it could just sort of be that this is a deeper sort of pullback into this channel. You can see at one point here, it tried to do this reversal, and this is what we were saying, this kind of move here. It could have just been a back test of this sort of channel, but it's looking more like this is just a fake out of that channel, and it's back into it here. So obviously, if we can get above this falling resistance, which I think is going to be quite strong, because this is the top side of that triangle, or falling resistance, basically, that it's been, you can see here, it's been respecting this throughout the whole year. It's popped out once and then slapped straight back down, came out in this section here, but didn't even last outside, and now we're pressing up against it again. So I think sort of like certainly, you know, we're seeing some fast move back. I mean, that was a big engulfing day there for copper. So I think we're just going to have to sort of wait and see again what the US does with this. But above this line here, and particularly above these highs, where I think I had the alert set here, if we get a trigger on that, I would say that, you know, that's going to be picking up on a lot of people's radars and that for copper to sort of be moving forward. So that's where I'm sort of looking at the moment. Of course, you know, considering both sides of it all, if we get a fail and it comes back down to this side over here, we've got our levels of support. We've got this main super strong support from the downside here, and we've got the intermediate support, which you could see price tried to come back. It didn't even get down to these supports down here before it sort of rallied back up into it here. I think there's a chance as well that, like, you know, people are very sort of much considering it. It's either one way or the other. It's, you know, CPI comes in low, US dollar's going to sell off, comes in hot, high, it's US dollar's going to be bought up. And that's certainly, you know, textbook reactions, and that's what will happen straight off the bat. But there's also the possibility that we see something reminiscent of the sort of RBA rate decision, whereas you get the technical action, but then, you know, the reaction a second late, like after the initial drop, reverts. So even though sort of like, you know, US is trying to sort of fight on and sort of keep, US dollars trying to fight on and sort of keep itself elevated, maybe depending on how high it comes in, you may see that initial pop on it, but people may just use that as an excuse to sell into it. Because if we go back a little bit, just back onto the DXY for 1 second, if you remember the price action through this period here, and also it was through this period here, we had some strong US data, which should have caused it to continue moving higher. But you can see these kind of pops here. So where have we gone? These kind of pops here. This was obviously, I can't remember, obviously this is going back I'd have to look it up as to what it was. It was 6th of October, 11 o'clock, Friday. So that would have been that would have been the first Friday of the month, so that would have been NFP. So, you know, initial reaction, bang, moved right up. What'd they do? They used it as an occasion to sell straight into it. Bang, came back down. And then sort of like obviously sort of through these other periods here, trying to find some here, but you know, these large move up sort of sections, and they were just sold straight back into. So the things to sort of keep in mind, certainly sort of like, you know, that although sort of, you know, the textbook reactions are what they are, and you'll get that on the pop, just like with the RBA, you know, if the market's still in a selling mode and overall wants to sell US dollars, which, you know, based on these large moves down here and the fact that it hasn't held this channel moving up here, we know on a technical basis, this is in a sort of bit of a bearish kind of sort of setup at the moment. So if we drag the highs through here, you know, I mean, there's your higher low, and he's starting to move down now. Potentially some sort of thing like this for a channel, which sort of, you know, goes in with the same sort of width of it all. Actually, if you drag this out, it also gives you that sort of bear flag, which lines up down here as well. So these are just sort of things to keep in mind, that if the market wants to sell US dollars, regardless of what the print is, obviously this can change, and this is just hypothetical. Even a spike up could just be used as an occasion for them to sell it straight back down. So it's certainly something to be aware of moving into this sort of CPI print. Anyway, back onto copper. So yes, we want to get above this. We want to get above this alert. I mean, above 376. I think that's where we're going to sort of call copper for a little bit more of a positive outlook, because then you're really sort of firming up this higher range. You're up above those previous highs despite the little shakedown. And if you're getting above this falling resistance, that's going to be taken note of. Cool. And finally with China. China, you can see for a second here, it sort of, as it broke this channel, came back, it tried to find support here on these previous highs. It sort of gave a shoot off here, but again rejected and locking in a lower high. So this is only on the 1 hour, and you know, it's really too tight of a thing to sort of trade on the 1 hour, particularly the last month or so, because it's just been such a tight little consolidation range. As I said, 1% for the last 3 months. But certainly at the moment, it's looking like this is another one that's sort of saying, hey, look, we're happy to sort of try and sell US dollar. This is the crucial point down here underneath this 726. We've seen a touch up of the rising resistance from the start of the year. We've got the very strong, put this onto a daily, is the best way to say it probably, very strong horizontal support here. We've got an engulfing day, which has sort of come right off this midway range that we said. Sorry, midway sort of swing point in this larger range. This is very much sort of lining itself up for another push to the downside, and this is pretty much, as you can see, this is where I traded, marked it out from previously, sort of coming up here. We said we had that negative divergence, just comes up time and time again. They're a great reversal, and we broke through this 1 hour trend line, and bang, it's come down, found support where we thought it would, pushed up, found resistance where we thought it would. Now the confirmation is to take out these lows here. We've seen so much buying happening in this green zone. Once we can see that the market is said, look, we're not going to buy it at this zone anymore, and that's shown by basically a candle closing to the downside, that's when we're going to get our push down. And you can see, obviously, where we've got the sort of measured move price target, up and down, a couple of pips either way in that, because obviously, this is not a clear to the point, to the penny defined range, but more or less that's the areas. And we're seeing, look, if you sort of drag this one across here, it could be up just a little bit touch here, higher here, if you were to line it up with these previous support areas, previous resistance areas. But more or less, this downside target, I think I still maintain is the first move, possibly to sort of see a rally through here and come down to this one over here at least. This is this is only the 38% of the entire move from March. So it could still come back down here and be doing something very strong. What you could also be seeing once it does come back down, or if I should say it comes down and hits this second price target here, again, we could be looking at something, where have we gone? Something similar to a head and shoulders along this way. Obviously very long sort of head through here. And then we could see a push back up over to this side here. So more or less sort of, if, again, these are all hypotheticals, but you need to plan out for these things. If we get the sort of breakdown here, maybe a bit of a bounce, maybe it comes down here, then sort of we see a stronger sort of rally up to here and this kind of thing for a bit of a, left shoulder, head, down to the neckline, solid neckline, where we know that this is going to be a strong support to get down here, rally back up, and then sort of push down a second time. And as I said, this is when I imagine sort of, this will be aligning with the same time that US dollar will be sold off to the point that it's sub 100. So obviously still a little way to go on that, about 5% or so, but that's kind of where we're at the moment. So yeah, basically in short, I think sort of probably a fairly slow Asia session. Looking for a little bit more sort of upside on Aussie to sort of get above that 64 zone. Gold, I think, will remain pretty flat in that till we see that CPI print, then expect a little bit of action and movement in the market. And then sort of we can sort of wait for these alerts to trigger before we sort of can sort of confirm anything for the time being. Okay, that's about it from me.